Hello, everyone. Welcome to video 5 of chapter 4. So far in this chapter, we've talked about a long list of various basic credits, basic personal amount, age, pension. In this video, we're going to go into one of the more complicated credit amounts we get, is that's from charitable donations. The other high priority calculation in this chapter is medical expenses. Depending how long charitable donations takes, maybe I can fit that in one video, but I think I'd rather split it out into two videos so you can have each subject separately visible on the site. So let's get into charitable donations, and I'll explain why it's more complicated, but kind of better for taxpayers. So whenever we have a tax credit base, we apply a 15% rate to it. So the first time home buyer is $10,000 credit base, and it saves us $1,500. It saves us 15% of our credit base amount. So when we give a charitable donation, we still use that 15% rate, but we only use it for the first $200 of eligible gifts. So if I pay more than $200 in donations, the amounts above $200 will apply these higher credit rates of 33% and 29%. So it is set by the government to encourage people to give donations because the tax credit, the credit amount you will accumulate against your taxes, is higher than the bracket you might find yourself in. And I'll just jump to this to explain that further. The 15% credit rate that we use is identical to the tax rate of the lowest tax bracket. So if your income is below 57,000, all of your income is being taxed at 15%. In order to be taxed at 33%, your income needs to be more than 253,000. So you are allowed a credit rate of 33%. So even though my income might only be like 100,000, so I'm still in that second bracket. I don't know where my mouse disappeared. It's there, but it's just not visible. Anyway, so in the second bracket, my marginal tax rate might be 20.5%, but those tax credits I'm getting will be at the 29%, that much higher rate. It uses 29% because in the past, this used to be the highest tax rate. In the past, there was only four brackets. The fifth bracket at 33% was introduced at a later time. So instead of redoing all of the charitable donations, they just sort of tacked this 33% into the formula. So if my income is about 100,000, my first $200 will get a credit at 15%. Any donations I make above $200 will get a credit at 29%. If my income is more than $253,000, I'm allowed to get a tax credit on donations at 33% up to the amount of income that's in this tax bracket. So if my income is, let's say $300,000, at $300,000, we are into this tax bracket by 46,586. So of my $300,000 of income, only about 46,000 is being taxed at this rate. So only $46,000 of donations can get credited at this rate. So the first 200 is at 15%. The next batch of income that's in this bracket is 33%. Whatever's left is at the 29. So hopefully that was understandable, but I'll go back to the calculation. So our first $200 gets a credit rate at 15%. If we have income over 253,000, then however much income is over that amount can get a credit rate of 33% if we donate it. And then anything left is the C amount. Any excess gets a credit rate at 29%. For the B, the lesser is the total eligible gifts, less $200. So if I donate $5,000 and the first 200 was already applied to the A value, I only have $4,800 left of donations left to apply the 33%. So if my income, like I said, in our example at 300,000, my income was in the final bracket $46,000. So that 4,800 of donation we have left will apply the 33%. So we have to remove the $200 because it's already been used. Only the remaining eligible gifts can be allocated to B. And once we've maxed out that taxable income, any donations that are left goes to 29%. So to give an example of that calculation, let's say an individual has net income of $300,000. They make eligible gifts of 210,000. The maximum, do we have the rule here? Oh, the maximum amount of donations you can claim in a year is 75% of our net income. So if our net income is 300,000, we can't claim more than $225,000 of donations. That is 75% of our net income. But our eligible gifts, our eligible donations is $210,000. So we're below that maximum. So we'll be able to claim the full amount. Our first $200 is at 15%. So we save $30 on our taxes. The next batch of donations that we can claim at 33% is going to be limited. It's limited by first how much donations we have left, but we only use 200. So 210,000 minus $200, we still have $209,800 of donations left to allocate. So we have lots. The amount of taxable income we have over that bracket limit, if I go back to that spreadsheet, that 253,414 is the income needed to get into tax bracket 5. So at our example, we're into tax bracket 5, $46,586. So of our 209,000 of donations left to allocate, we can allocate 46,586 to that rate of 33%. So 46,000 times 33% gets us this $15,373 tax credit against our balance owing. Anything that's left, so we take our 210,000 of donations minus the $200 allocated to A minus the 46,586 allocated to B. What's left for C is 163,214. So we had $200 in A, about 46,000 in B, and that left us with 163,000 for C. So this 163,000 is applying this 29%. It will reduce our taxes by $47,332. So we donated $210,000 and we got back from taxes $62,735. So this is an intent. So the credit rates for donations is preferred. It's higher than regular credits give. And that's on purpose to encourage people to donate to charity. So I mentioned before, the general rule, there's a limit of 75% of net income. So we take our net income, we can't claim a donation more than that 75% of net income. If we do, for whatever reason, donate all of our income, we can claim up to that 75%. Anything that's left can be carried forward for 5 years. So if the donation exceeds the 75% limit, a choice can be made to not claim all donations and carry forward 5 years. There's additional years for ecological gifts by donating land and property. But for this course, we're just focusing on that 5-year carry forward. There are 2 additional limits based on taxable capital gains and recapture when gifting capital property, but that's more complicated and we go into it a little more, I think, in chapter 11. So for the time being, we're going to ignore these limits and just focus on that 75% of net income. In the year of death, a lot of people's wills will bequeath like an estate to charity, or at least a certain portion of their estate. So in your year of death, you can donate 100% of your net income because you're not going to be using it anymore, right? So any charitable donations not used won't be carried forward because you will no longer be alive to do so. So we have this 75% limit most of the time, but that limit is 100% of net income in the year of your death. Because we have this $200, so that first $200 at that lowest credit rate of 15%, if I was to make donations and a spouse was to make donations, we're both trying to get over that small obstacle of that first $200. We want as much of our donations to be at those higher credit rates as possible. So the CRA allows spouses to combine donations to one tax return. So my spouse or I will choose which return we'll add it to, and we'll take all of our donations and we'll put it on one return. That way we only apply that first $200 once, and then everything else will at least be at 29%. If we have our charitable donation tax credits, those credits are non-refundable. So if we contribute so many donations that our tax payable gets to zero through the credit, anything beyond that would be lost. It would be unusable. So we can choose to only claim the amount needed to reduce tax payable to nil. So we will consider our non-refundable tax credits, get that tax payable to zero. Once we're at zero, any donations we have left, we can hold on to and claim them in the next year. We can carry those unused credits into the future. So donations are good because you're not likely to lose out on any of the actual credit amount because you can just carry it into a future year and hopefully earn some income and then get those donation credits again. Okay, let's go to the exercise 410. In 2025, Travis Hoffman has net income of $350,000 and taxable income of $325,000. During the year, he makes eligible charitable donations of $225,000. Determine our charitable donation tax credit. So these are really big numbers. The net income of 350,000 is important because it determines what's the maximum donation we can claim in a year. So 350,000, we can only claim up to 75%. So when we multiply by 75%, our limit is $262,500. But our actual donations is 225. So we're below this limit. We'll be able to claim all of it. We want to know our taxable income because our taxable income is what's used to identify that B value, the amount of taxable income that occurs within bracket 5. So going to our spreadsheet, if we do this, 325,000 of taxable income, we are into that fifth tax bracket by $71,586. That's the portion of our taxable income that's being taxed at the highest rate. So when we go to our solution, our eligible donations is 225,000. The first $200 is getting that 15% credit rate. So we have our savings of $30. Our part B is going to take the lesser of what donations we have left. So 225 minus 200 or 225,000 minus $200. We still have $224,800 left to allocate, but our taxable income in bracket 5 is 71,586. So we'll take the lesser of these two amounts, 71,000. That benefits at the credit rate of 33%. So we'll save 23,623 on our taxes. So we saved 30, we saved another 23,000. What's left? 225,000 minus 200 minus 71,586. It leaves us with $153,214 of charitable donations. That will get us a credit at 29%. We will save another $44,000 on our taxes. So these three amounts combined, it will have an overall tax savings of $68,085. So that's our charitable donation credit. There is a follow-up question that is, I think it's just on the next page. Where are you? Right here, 411. So this uses the same numbers, or at least the same net income of 350,000 and the same charitable donation. So we know we'll be able to use all of it. It just dropped the taxable income to 250,000. So in 2025, Terry Hoffman has net income of 350,000, taxable income of 250,000, and a charitable donation carry forward from 2024. So instead of getting those donations this year, we actually paid them last year and they carried forward into 2025. So still the same amount, 225,000. Determine the charitable donation tax credit this year. Until what year can we claim the unused portions of the 2024 donations? So since the donations are not ecological, they have a 5-year carry forward period. So if we made the donations in 2024, we have up to 2029 to claim them. But our donation credits will all get used in 2025. So go to the next one. By dropping the taxable income to 250, now our income, 250,000. Now none of our income is falling into that final bracket. So we won't be able to claim any of the donation credits at that 33%. So in our calculation, the lesser of 224,800 or 0 is 0. So since we had no income in bracket 5, we get no credit for it. So that means our first 200 went to 15% and everything else went to 29%. So 224,800 at 29% saves us 65,192 plus the $30 from that first $200 of charity donations. We save $65,222. So in our previous example, we were able to allocate some of this donation to that higher rate, and it got us an extra $3,000 of tax credit. Since we've used all of the amount, there's no charity credits to carry forward, so we have no carry forward left. Okay, I think that's enough time for donation tax credits. In the next video, I'm going to go over medical expenses because that also is a high priority calculation. Thank you for your time. See you in the next video.